Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Friday morning pre-market webcast. Okay, so we had the jobs report. We added 163,000 jobs, and basically what we saw, you see yesterday's low down there, 1349.25, and we basically walked the market up 30 handles into the report, and we come in at 163, which isn't too good, it isn't too bad, and it was baked in. So we've done nothing. We made a reaction high up at 1380, which we haven't really taken out. We traded as low as 1375 after the report. Your current trade is 1376.75. So the reaction after the report has really been not much. So today I'm really looking at a test of 1380 to 1383. I think we need to rest up here. I'm expecting a pullback today. I still think that we're going to see some lower prices. I'm looking at two areas today. You've got this daily and 3-day pivot, 1364.83 to 1366. Then you've got your daily, your 9-day and 20-day pivots, 1356, 1357. So that's a couple of areas that could be support for a buy on a pullback. So, you've really got to look at what we have, what we're looking at. Draghi comes on yesterday morning, and the takeaway from yesterday is that the leaders in Europe are simply out of credibility. They are no longer believable. When they say that they may do something, the market is not going to give them the benefit of the doubt anymore. And we are going to sell off 20 handles. But with the potential for QE3 out there at some point, the reality is going to set in, and there is still going to be a bid underneath this market. When you look at the daily chart, and what you see here is a daily chart of the ES, what you see is that yesterday we came down and we touched this red line, which is the 50-day exponential moving average, which is still fairly bullish inside of this longer-term uptrend. So you're seeing a series of higher lows. And while these last few days have felt very bearish, the onus is still on the bears to make something happen. And we continue to trade above the purple line, which is the 200-day exponential moving average. And as long as we keep doing that, it's, the market is in, the bulls. The market is the bulls to lose. And the bears have had so many chances over, the past, certainly throughout 2012, back into 2011. You can argue all the way back to summer of 2009 to knock the market down and keep it down. They've never been able to do that. And it's because of this persistent bid, dip buy, bid underneath, because of what the Fed is either doing or going to do or believe it's going to do. So if that wears off, then you may see a change. But I think despite everybody being so upset about what's going on in Europe, I think that the promise of QE3 is still out there. Although I think that today's employment numbers certainly takes it off the table a little bit. So I think that once this walk up overnight wears off, I think you're going to see some lower prices, maybe down to test the green line here again, the middle Bollinger Band down at 1355. Let's do support and resistance real quick. Current trade 1377.25. On the upside, I've got 1379.70, 1382, 1387.75, 1389.66, 1393, and 1397. On the downside, 1372 half, 1371.87, 1366.83, 1366, 1364.83, 1362.20, and the double pivots 1356 half to 57. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader for Mr. Topstep. Have a great weekend. Trade 'em well, everybody. See you Monday.